What up guys, Nakamoto Crypto here. Today I'm reacting to Peter Schiff debating Richard Hart, or Richard Hart calling out Peter Schiff in a debate. He's been calling him out a lot lately on Twitter, and let's see how that goes. Stay tuned, like and subscribe. Let's get to it.
Love to be here.
Look, what I want everybody to know that how this event started is that Richard, he put a tweet out and he said to Peter, I challenge you. Would somebody take it up? We took it up and we brought you two together. It hasn't been easy, but we've brought you both together. So I want to thank you both for making the effort and giving us your time. Gentlemen, I have a series of questions. We'll run through them. Don't know how far we'll get with the questions, but I'll try and get as many done as possible. And you'll both have a chance to talk and rebuttal. Maybe if we don't scream over the top of each other, give each other a chance to explain what's going on. That'd be nice. Okay, are we ready?
I'm ready.
Okay.
All right.
You both believe in your respective investment vehicles, and please, I'm going to read from some notes here, so please forgive me. Peter, you're about gold, and Richard, you're about cryptocurrency. Peter, where do you see gold going in the next 12 months? And Richard, where do you see cryptocurrencies heading in the next 12 months, including Bitcoin? So I'll start off with you, Peter. Where is it all going for gold?
All right, well, first of all, let's put gold in its proper context, because I'm not all about gold. I mean, I'm an investment manager, and I've constantly or consistently recommended that people hold maybe 5 or 10% of a portfolio in gold. But the remainder of the portfolio is in, income-producing assets, companies that I think have good fundamentals, that are growing their earnings, that are paying good dividends. I look at gold as a proxy for cash. A lot of people are talking about holding cash now, not for the yield, because there is none, but for the optionality, because if stocks go down or real estate goes down, you can use your cash to buy these assets on sale. Well, I do the same thing with gold. I would rather be holding gold, waiting for better buying opportunities in stocks that I like or real estate that I like, rather than fiat currency, especially in an inflationary environment where it's the fiat currency that could crash rather than the assets. But if you're holding your liquidity in gold, well, then you're protected from inflation. And so that's why I like gold. I mean, I like gold as an alternative to dollars, as an alternative to euros, yen, any of the fiat currencies, and as an alternative to any of these crypto fiat currencies. If you think stocks are expensive, if you think real estate is expensive or bonds are expensive, and you want to have dry powder, then gold is a great place to keep it. Gold is an excellent store of value. It's maintained value over the years, over the decades, over the centuries. It's been money for thousands of years. So I've
Richard looks bored already.
Believe that gold is a good, it has a position in a portfolio to act as a as a store of value and as a source of liquidity. But over the long run, I mean, gold doesn't produce any income. It's not like real estate where you get rents. It's not like a stock that has earnings and pays you dividends. It's not like a bond where you can get interest, although today bonds pay very little interest, which is part of the problem. So over the long run, no, you don't want to just have all of your wealth in gold. You want to own other assets that will perform and deliver income. But over short time periods, if markets are expensive like they are now, and there's a potential for a rather substantial decline, having an allocation to gold makes a lot of sense.
Yeah, everything he just said was very stupid. So this is going to be a very stupid debate. I'm sorry, you guys, that we're hoping for something very exciting. He just crushed his own argument in the first minute. I'm facing a guy that owns 10 to 20 times more not gold things than gold things, because he knows that those things are better assets. He says that gold holds value over time. It doesn't. Here's a chart of gold adjusted for inflation where you lost money for 40 years. 40 years you lost money. 40. If you had bought gold 10 years ago, you're down today. You lost money from 10 years ago, not even inflation adjusted. So for a guy that doesn't even talk his own book, literally starts the conversation with, I don't even like this stuff enough to own more than 5 or 10% of it, it's going to be a very easy debate to win. And the charts, the facts are on my side. And I got good news for you. Just because gold is a terrible investment, I may even own more than Peter with my $250,000 gold watch or my gold trinkets. I understand what gold is.
Man, this guy be flexing a lot.
Supposed to be used for. Gold is used as jewelry for 50% of its market cap. Go on Wikipedia, look up gold. You'll see that 50% of the sales of gold is for jewelry. And what is jewelry? It's just vanity. And what could be more willy-nilly and prone to fancy than vanity? So gold that he doesn't even believe in enough to own more than 5 or 10% or recommend anyone own more than 5 or 10% is backed 50% by people flexing and looking silly. I look silly on purpose, right? So, I mean, you want to see the HEX chart? You want to see what the HEX chart looks like? It ain't looking like this. Here's what the HEX chart looks like. Only up and to the right forever. By the way, copper beat gold. You bought gold 5 years ago, you would have been better off with copper. Copper that you can actually use. Peter says gold, well, I don't want to crush all his arguments ahead. I could just beat all his arguments now. What he's going to say is gold has value, Bitcoin doesn't have value, which is instantly defeated by the fact that you can exchange Bitcoin for gold. I remember back when Bitcoin cost less than an ounce of gold, now Bitcoin costs 20 times more. You could have bought, in the top of, I bought Bitcoin at 30, I mined it at 50 cents. In 2013, it went up to $1,300, which was the price of gold. An ounce of gold was worth less than a Bitcoin in 2013, 2014. Now, an ounce of gold is worth 20 times less than a Bitcoin. And so the fact that you could turn Bitcoin into gold at any time you want, I think his company even accepts Bitcoin to turn it into gold, disproves his idea that that Bitcoin has no value. And I don't even like Bitcoin. Bitcoin destroys the environment just like gold does. 50 to 60 people just died yesterday mining gold. Yesterday. How many people died mining Bitcoin? So this is the reality that we live in. I've already won the argument. It's just a question whether the audience gets to.
That's a valid point. We haven't heard of a single guy that died mining Bitcoin yet. A lot of people died mining gold. Let's see what Peter's rebuttal is.
If you're finished flattering yourself and congratulating yourself, first of all, yes, I just because I think that gold should be a small part of a portfolio doesn't mean I don't like gold. I just said that gold is not an investment. Gold is like cash. And right now, I think there are a lot of very good investments around the world that I want to own. Now, if I had a choice between just the NASDAQ and gold, I would own all gold. But those aren't my choices. If my choices were all gold or all Bitcoin, I would own all gold. If it was all gold or all HEX, I would certainly own all gold. I would own no HEX. I would own no Bitcoin. But when I look around the world and I see a lot of good companies trading at very low valuations and paying very good dividends, I want to own those assets. I don't want to have everything in gold. Now, if things were a lot more expensive, I might want to up my allocation to gold, but I would never include HEX in my allocation. I mean, you want to talk about what gold's done over a particular period of time. Well, yeah, if you bought gold 5 years ago, you had a great return. It's up 90% over the last 5 years. Over the last 10 years, no, it's about flat over 10 years, but go over the last 20 years. 20 years ago, gold was less than 300, and now it's 1,900. So that's a pretty good return. Now, if you want to say, oh, what if you bought gold at its peak in 1980 at 800, you have a lousy return. Go back 10 years earlier and you bought it in 1970 at $35 an ounce and you had an incredible return. So you can always pick and choose whatever time frame is convenient for you. But the reality is you're so excited about how much HEX has gone up. HEX is down about 70% from its peak. So there are people who bought HEX who are down 70%. Nobody is down anywhere near 70% in gold. And the people who have made money in HEX haven't made anything because they haven't sold, because they've locked up their HEX in your scam of a CD. You've conned people into taking a worthless currency that you create for nothing, and they've agreed not to sell it. So you.
I'm not gonna lie, this debate seemed one-sided. At first, I thought Richard Heart is going to just come in here and annihilate Peter Schiff, but Peter looks like he knows his stuff. Like, he's fighting back.
can keep unloading yours to the people who are foolish enough to think there's a free lunch and they're going to get rich in your pyramid scheme, but they're not. They're going to go broke, and eventually they may come looking for you, because all the money that your followers are going to lose is the money that you're making. And we'll see how the authorities feel about that. You know, when you end up in a court of law, because I know a lot of the people who lost money are going to be looking to have to try to claw back some of their losses from your winnings.
So what Peter here is doing is called a parade of imaginary horribles. So to the best of my knowledge, no cryptocurrency founder has been imprisoned for creating a cryptocurrency. Satoshi, who created a cryptocurrency... I
didn't say imprisoned, but I think you will be sued. But go ahead.
Okay, so let me give you an example of a company that created a cryptocurrency and got sued. Unregistered security offering, Tezos, got sued, settled. EOS, unregistered security offering, raised $4.2 billion, settled for $27 million, and got a waiver to continue operating their business. And the reason the SEC is friendly towards and settles with these companies is because they actually do care about the investors, and the investors don't want their money back because they all made money. People that bought EOS at the ICO made money and are still up today. People that bought Tezos at the ICO made money and are still up today. And so this idea that people are going to want their money back is factually false, provably false by SEC jurisprudence, by SEC case law.
But it did hurt them though. That's the thing. Like EOS, after that lawsuit, their popularity dropped and they pretty much dropped out of the top 10 or top 20 of the large caps. Tezos also is the same thing. Like last year, you literally didn't hear anything about Tezos. You didn't hear anything about EOS. They were literally pushed out of the top 20 of the largest cryptos by market cap. And that lawsuits, I mean, those SEC filings and lawsuits and fines could have been part of the reason why.
And
they're only going to want their money back after the coins crash.
No,
see, nobody wants their money back when they're winning. It's after they crash and lose their money that they want it back. So we haven't finished this game yet. The air hasn't come out of this bubble yet.
Peter's talking about buying gold a long time ago. Gold was down. If you had bought gold in 1980, it dropped 70% until 2000. You were down for 20 years.
Because the 10 years before 1980, it went from 35 to 850. So it had a spectacular rise, and it never went back down anywhere near $35 again.
Peter,
so
you can't say...
just look at these time windows and talk about, and I've already said, gold is not a long-term investment. I never recommend gold to anybody as an investment. It is a store of value. It's cash. Instead of sticking dollar bills under your mattress, you can have gold coins. They are much better to hold than fiat currency. But over long periods of time, you want to invest your money and let it grow. Gold doesn't grow. It just holds its value. It doesn't
even hold it, man.
Accrue value. It doesn't gain value.
You're down versus 10 years ago. You're down versus 40 years ago, inflation adjusted. You're down versus almost every time frame. Well, coins made an afternoon as a joke outperformed.
Gold is up this year. Bitcoin is way down. Your HEX coin is down this year. Gold is up.
No, my HEX coin's not down this year. No, HEX is up this year. No, it's not. You have a bad memory.
What did it end last year? I saw it was as high as like 49 cents, and I just checked it. It's 15 cents.
Yes.
So
he did his homework. Peter Schiff did his homework.
Where did it end last year?
HEX went up 1,000,000% in 2 years.
Where did it end 2021? Where did it end 2021? December 31st, 2021.
Here's the HEX chart. December 31st, 2021 was 6 cents. Actually, half of a cent, actually, based on this chart.
So
this is why I bring charts.
So it went down from 49 cents to 6 cents, and then it snapped back up to 15 cents?
No. Basically went from...
I just looked at the chart on CoinMarketCap. I don't know, is that not the actual chart?
It's a good site. Yes, CoinMarketCap actually has an accurate price chart, but you have to click log in the bottom right corner, or else it doesn't make sense. So when you compare an investment that isn't even an investment, Peter just told you not to invest in gold. It's not an investment. It's just a risk-off asset to just sit in until you get into something that's good.
Well, it's a store of value. It's a monetary equivalent. It's like holding cash, except instead of dollars or euros, which are just fiat, creations of a central bank, you can hold real money, which is what central banks used to hold. All these currencies.
But so is Bitcoin, though. The argument Peter's making it pretty much fits into Bitcoin's whole existence pretty much. He just doesn't want to accept Bitcoin. So I guess he's going to be a gold bug forever.
Used to be backed by gold and redeemable with gold. But the world has moved off a gold standard to a fiat standard. But if individuals prefer the gold standard, they can do it themselves. They don't have to hold government paper as money. They can hold the real thing. They can hold gold.
But the thing is that you suggest people do hold government paper. You just may not be aware of it. So
When
Peter
do I
and
suggest that?
you'll see. I'm going to show you. Peter and I actually agree on some things. We both think that the government printing money left and right forever is disgusting and steals from savers. Do we agree on that?
Yes.
Okay. We both think that the value of the dollar over time is going to zero. Literally zero. Charlie Munger agrees with us on this. Do we agree on that?
Well, it may go to zero, but it may approach it. You know, It's already practically zero based on what it was worth in 1913. So, you know.
I think Peter and I both agree that we like people to self-custody their funds so that they can't be robbed by their banks. So there was some political activity going on in Canada where if people even sent money to other people so that they could buy food and eat, their bank accounts were seized under emergency action, as though there was some giant emergency, like a war was going on. Everyone else has it bad everywhere else in the world right now, and yet there's no emergency actions in those countries, but Canadians are having their bank accounts seized, and I don't think Peter likes that. You don't like that either, right? That sucks. We agree on that?
No, I do not like what the Canadian government is doing at all.
So Peter and I are both for self-sovereignty. We're both for people not being robbed by the government by holding the government's dollars. By the way, Peter's camera's frozen, so if you want to pan to me, my camera's not frozen.
It doesn't look like it's frozen.
Oh, you just came back on. Yeah, okay. And then, well, it's just when I'm talking, they're showing you. It's weird. No one sees me talk. Unless they're seeing something different on YouTube, whatever. So the point is, there's things we agree on, right? And we both agree that stocks have been wonderful investments, which is why he promotes them. But there's a trick to stocks that people don't understand. When you used to buy stocks, you used to get shares in companies, and they were physical printed shares. And now when you buy stocks, you don't get the shares. Your broker gets them, but guess what? He doesn't even actually get them. A giant company in New York called the DTCC actually holds everybody's shares. And every once in a while they do an audit and they discover, oops, people have been trading shares that didn't actually exist because neither you have the real shares nor your broker, and then the DTCC, maybe they have them, maybe they don't. And it's a giant house of cards. And you just hope that if when you go to get your money, they don't give it to you, now you have to sue them, and you're basically relying on the government to handle.
Wow. This is a big bomb that Richard Heart is dropping right now. He's got a lot of knowledge with this thing. Like before crypto, he was involved into stocks and all of that. And that is showing in this debate right here. I didn't even know that you don't actually own the shares of stocks that you are actually buying on the stock market, which is supposed to be the safest bet. So I guess you own your keys, you own your crypto, but you don't really own the stocks into the traditional market. That goes to tell you, man, crypto is the future.
Handle custody for you. And it's very similar to gold. I've got $4 million of watches. They're mostly gold. I know that platinum's a better metal for making watches from because I can use 95% platinum to make a watch, why it says 950 on it. But on a Rolex that has gold, it's only 75% gold because they have to alloy it with actually more useful metals to make a watch out of it. And so
they're not more useful. They're just, they have different
very
properties. They're not more useful than gold.
Everything
By the
is
way,
more useful than gold.
If you have $4 million worth of watches, maybe in those watches there's $40,000 worth of gold. I mean,
correct.
Maybe about 10%.
That's right.
Yeah, so it's not, you know, they don't, you know. So
and they've outperformed in appreciation from gold as well. All of
but most of the value in a watch is due to the craftsmanship, the making of the watch. The gold is used because of its properties that make the watch better, that make it last longer, that make it look prettier. You can go swimming with the watch. It's like, you know, it's going to resist the water. There are a lot of characteristics of gold that make it appealing in jewelry. It's not used in jewelry by accident. It's used
I might own more
it's
gold
very
than you.
good.
Like literally, I might actually own more gold than you. Well, probably people
How
watching.
much do you own? I don't know.
I'm telling you right now. I'm telling you right now. If you go on my website, any of my YouTube videos, and you scroll down to the info.
This is completely irrelevant. This is the very first debate that I've really seen Richard Heart like rattled. Like, usually he's really good at these debates. He can dismantle these guys easy. He can take them down. But clearly here you can see that Peter Schiff is getting to him. Like, this is just crazy, man. This is completely irrelevant. Am I on more gold than you is completely irrelevant to the subject. Yeah.
I have the model numbers and prices of all the watches I hold. I got $4 million of watches. I got 20 of them. Because they're made of gold.
I got
my
gold
necklace is made of
too.
gold.
Who cares? I don't splash them all over my website.
I think it sounds like I'm promoting gold.
I'm wearing one, but I don't like flash them on my YouTube channel to show everybody that I got gold. But I wear them.
Okay, all right. Well, I thought I was here to argue against gold.
Pendant around my neck.
Yeah. So I grew up in Miami.
But you know what? Why don't you?
Let's go. But hold on. Let's
get yourself a watch made
self-custody. Cryptocurrency was invented to solve custody. Because right now, you don't have custody of your shares. The DTCC does.
Yeah, but when you have custody of Bitcoin, you have custody of nothing. So what? Who cares?
Well, that's funny.
You're custodying nothing.
Because I can sell that nothing for lots of that gold you like.
I've got a question.
You can only sell it because there's a fool who wants to buy it. But eventually the fools will run out of money, or you'll run out of fools.
Gentlemen, let's get out of the jury shop.
Go.
Let's have a chat about a few other things. Peter, can you keep ignoring the mass adoption of cryptocurrencies? We've got big institutions getting on board, countries accepting Bitcoin as legal tender. You've got Bitcoin representing the fastest adoption of any technology recorded in human history. It's growing at 113% a year. Peter, do you feel you missed the boat and regret
First of all,
not investing in cryptocurrency?
Okay, so first of all, as far as ignoring the mass adoption, I don't have to ignore it because it's not happening. There is no mass adoption of Bitcoin for anything. You're talking about countries accepting it. Okay, El Salvador is trying to experiment with it, but that's one little country. You can't say that that's some kind of wave of countries making Bitcoin legal tender. Is Wall Street in it a little bit? Sure, because Wall Street thinks they can make a buck on it. I mean, they don't give a damn. And most of these big investment banks that are allowing their customers to trade, they don't trade it themselves. I mean, they're just trying to make a buck. They're operating the casino, and if people want to get...
It's amazing to see that after 10 years or even 12 years, Peter Schiff is still hard-headed about Bitcoin and cryptocurrency. I heard that even Max Kaiser was shilling Bitcoin to Peter Schiff when it was literally at $1, and he refused to buy it. This was back in 2011. Imagine if Peter Schiff had bought Bitcoin instead of gold. How rich would he be right now? I think that's part of the reason why he's salty, because to watch something grow from literally $1 all the way up to $69,000 and you still speaking out against it, that's just mind-blowing.
Gamble, they're like, well, we're going to let them gamble at our casino because they may gamble at someplace else. What I will concede is that there are a lot of people that are gambling on cryptocurrencies, Bitcoin being one, but there's almost 18,000 others if you count all the altcoins, and then you can throw in all the NFTs. But what Bitcoin and other digital assets are used for is gambling. People buy them because they think the price is going to go up. People don't sell them because they think the price is going to go up. So it's all a bunch of trading. It's not being adopted for anything. That's all pie-in-the-sky hype to try to justify the appreciation that all the pumpers are claiming is coming, and that's why people are buying it and holding on to it. Or in the case of HEX, they're getting paid to hold it and penalized if they sell it. As far as regrets, do I regret not buying it? Well, look, obviously, I'm not an idiot. I mean, there are a lot of things with the benefit of hindsight. You can look back now that you know everything that happened and say, well, I could have bought this and made all this money. Of course, I could have bought Bitcoin when I first learned about it. I don't even remember where it was. I'm pretty sure it was below 10 bucks. I don't think it was below $1, but who the hell knows? It was so long ago, you know, it's hard for me to remember. But all the problems that I had with Bitcoin when I first noticed it, I think are all valid. I mean, in fact, one of the things I didn't like about it, I said, well, what stops somebody from coming up with another cryptocurrency? And of course, nothing. And that was part of the problem. I didn't see any real scarcity in an asset that had no intrinsic value and anybody could replicate. I also didn't think it was particularly scarce just because there was 21 million of them. 21 million is simply an arbitrary number of Satoshis. There's 100 million Satoshis in each one. And I know people say, well, you know, but you can break a gold down into little tiny grams, and that's true, but they're no good to you. I mean, if you want to make a watch, you need a certain amount of gold. A little speck isn't going to do anything. But as far as Bitcoin, whatever I can do with a Satoshi, I can do with 100 Satoshis or a million, because I can't do anything with one, so I can't do anything with a million. So I never bought that there was any real value. What I missed was that, you know, this would become like tulip mania, that this would actually catch on and become a massive speculative mania. I did not have the foresight when Bitcoin was, you know, 10 bucks to see this happening. And, you know, but when it did get up to 1,000 and then it pulled back for 200 or 300, I looked at it for a while and I thought, you know, should I buy this crap? You know, it may have a big run. I could see all the hype and all the nonsense that people were saying about it, and a lot of people were actually believing it. But then fundamentally, I still couldn't get it, and I knew that I could never advise other people to buy it. That's what a lot of people do in crypto. It's all pump and dump. You just get in it, and then you pay celebrities to promote it. You give away free coins. Hey, pretend you want your salary in Bitcoin. It's all hype, because the only money that is made in crypto is the money that's lost. Somebody has to lose money for somebody else to make it. It's a zero-sum game. In fact, it's a negative-sum game when you figure out all the other costs, the trading costs, the marketing costs. You know, think about all the money that was spent last year advertising Bitcoin and other cryptocurrencies. They spent a fortune pumping it up, yet, you know, everybody who bought is way down. I mean, the market's been killed despite record amounts of publicity and advertising.
Yeah, Peter's making a few good points here. Last year was just crazy in crypto. Everything was going up. I mean, the adoption for last year and the popularity crypto has gained shocked everybody, man. Elon Musk, celebrities on Twitter who never heard of Bitcoin and cryptocurrencies was getting into NFTs and all sorts of things. And yeah,
advertisement for Bitcoin. Now, so do I regret not taking advantage of other people's greed and ignorance? Yes, I could have made a lot of money had I bought some Bitcoin and sold it. I have no idea where I would have sold it. Had I bought some years ago, it's, you know, you don't know. Would I have still held it if I bought it at, you know, 10 bucks or 20 bucks? Would I still own it at, you know, 38,000 or 37,000, wherever it is right now? I have no idea, because I didn't do it, right? And there's a lot of other speculative investments that I didn't make. That I could have made a lot of money on. Fortunately, there are a lot of them that I did make. I mean, I've made money in other things, and I've done well on other investments. Yeah, I mean, Bitcoin would have been the best investment I ever made had I bought it at $10 and sold it at $69,000 at the high, sure, or even if I sold it today and bought it at $10. But I didn't do that. But what's going to happen to other people, what they're going to regret is not selling, because that's one regret I'm never going to have. But a lot of people are going to watch their paper fortunes completely evaporate. People are going to go from millionaires to nothing, and people are going to have a lot of regrets over the paper profits that they never realized.
You will never regret not selling Bitcoin, because there's always new highs. The way the halvings and everything has been designed, the entire protocol is for you to win. So at each point that you buy Bitcoin during a last all-time high, all you gotta do is just wait for the next all-time high. It might take 2, 3, 4 years, but you'll get there.
First of all, Peter describes a problem that people do have in cryptocurrency, where they sell on a 1x or a 2x or a 3x and think that they're smart, and then it goes up 69 million x. So you could have bought HEX on January 5th of 2019 and sold it when it doubled, 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 when it doubled again, when it doubled, when it doubled, when it doubled, when it doubled, or when it doubled. It doubled 13 times in 2 years. And so you could have hopped off the magic carpet ride at any time that you wanted with insanely mad gains, and you could have been one of those red candles everybody hates so much. And people run into this problem when they reach cryptocurrency, they're not used to seeing millions of % returns. HEX did 1,000,000% return from the bottom of the top, 623 days, and that's without staking. If you'd staked, you would have made 2x.
Yeah, I'm not gonna play the full debate. A link of it will be in the description box below. What are your thoughts on this debate? They both made fair, valid points. Peter Schiff surprisingly with great comebacks, and Richard Hart also made valid points. Watch it to the fullest and just let us know in the comment section below what are your thoughts on it. Like up the video, share it, subscribe for some crypto content. I have been Mr. Nakamoto Crypto, and I'm out.